Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now here on Market Talk as we discuss the market trade action on Tuesday, Jim McCormick, agmarket.net, is with us here today. Jim, great to catch up with you again, sir. Hope you had a good Thanksgiving.
I did. Thank you for having me on. It was a very good Thanksgiving, and the market action right now, Jesse, it feels like we're definitely in holiday mode, very light action. And, this may be this tone may be what we see all the way through the holidays, kind of what we saw today. Just not a whole lot of enthusiasm one way or the other on the buy or sell side.
Yeah, really quiet market day on Tuesday. There just was not a lot happening. I know in this trade, I think top of mind first, the China issues. Obviously, the protests going on over there with COVID and just their COVID worries, their economy, the demand out of China. I know that's had an impact in the grains, oil seeds, the crude oil market. It's had an impact there to start the week as well. Would you say that's probably the number one issue working through this market in this quiet holiday trading session that we're having here to start the week?
Yeah, it's definitely probably the number one issue right now. The reality is, so goes China, so goes the world's demand. They are the behemoth consumer of commodities, and if their economy slows down, it will have a ripple effect from everything from soybeans, corn, to crude oil, to the steel. And they're definitely fighting this COVID crisis right now. The reality is they've been sticking with a zero COVID type of situation for going on 3 years now. In essence, you get COVID, anybody around you're going to go into a lockdown right now. And the fact is that after 3 years, the people are very, very tired of it at this point in time. And we saw some protests, and the market kind of got spooked by that. I mean, traditionally, Chinese do not protest, and that started the week off on a very negative note. Now, it is kind of interesting. We are hearing reports out of China now. They are going to try to essentially inoculate their elderly at this point, because they haven't done a very good job getting everyone inoculated. And that is leading to a little bit of optimism. Maybe that'll allow them to back away from this lockdown a little bit as they open up a little bit. But the reality is they're in a very tricky situation, because if you look at their population, they have 4 intensive bed units per 100,000 people. So, the COVID strain they're dealing with is very, very contagious, so just like it is in the United States. I mean, I talked to several customers today who actually tested positive after being around people over the weekend. So, the problem the Chinese have is they haven't, they've done a very good job controlling it. If they let this virus if they drop their guard down too quick, it's probably going to run rampant through their population. And that would probably put a lot of people in the hospital. And that's not what the Chinese leaders want to see, because they like to kind of shove it in the U.S. face that, hey, look, we haven't had the crisis of population and deaths that the West has. So it's going to be very interesting, Jesse. And do they actually unlock really quick like some of the people are thinking? I think it's going to be touch and go depending on the headlines, and that's going to keep the market a little bit volatile. One interesting note about, you mentioned the crude oil market broke on that news. But what's kind of interesting, the crude oil has had a nice little rally here off of that, the original news stories about the protest on news that OPEC's going to cut production potentially next week. Well, the reason why they're cutting production is because they're worried about the Chinese demand for their products. So OPEC obviously believes that, this China situation and the COVID situation is going to be a drag on their economy, which is going to be potentially a drag on consumer or demand for crude. And they're trying to get in front of it by cutting production and trying to support their pricing.
On top of the China issue, we have the rail strike as well. And I know that it sounds like President Biden and Congress going to force this deal between the railroads and the union. And obviously that would be, railroad workers may not like it, but it's going to be a win for agriculture, just our general economy, if they can make something happen, because a rail strike, as we've talked about before many times, Jim, would just be catastrophic.
Well, exactly. I mean, the numbers folks were talking about $1 billion a day hit to the economy. And I know in the grain producers, we're thinking about moving grain to the market, move it to the situation. But the reality is we get a strike. Ethanol plants get run out of storage space from that ethanol production very, very quick. But more importantly, it's getting energy to people in the middle of winter. So it does look like the Biden administration had put the pressure on Congress last night to step forward and make a resolution for the essentially the agreement that the union heads had come to an agreement with the rail industry to essentially mandate that they take that deal at this point. And it looks like it's going to be done. From what I understand, both the Senate and the House, both the majority and the minority leaders say the votes are there to pass this and essentially avert a strike. That I think the reality is no one really wants to step in and do it. But the fact of the matter is the risk is too much. It's just too great for the economy. No one wants to take that risk.
Well, thinking about these news items in an otherwise quiet trade, Jim, I'll let you take your pick: corn, beans, wheat. I know fairly quiet day Tuesday in all three complexes. But as you look at charts, you think about where things stand in these grain markets and maybe conversations you're having with farmers. What are your thoughts? What are some recommendations here, final few weeks of the year, as farmers maybe look at the books and sharpen their pencils a little bit? Anything big standing out to you that we want to keep in mind?
Well, I think what you got to look at right now is, a lot of the producers pretty much the mentality is they put, we're done with harvest. It's in the bin. I'm going to wait until the 2023 calendar flips and then start moving grain. I would guess, Jesse, tell people to pay attention to what's going on in the price market. I've had several customers in the last 48 hours sell $7 plus corn and high 14s, even $15 beans. And the reality is, I think if you have an opportunity to sell corn with a 7 in front of it, you can sell beans in the high 14s and even $15 beans. I would take that bird in the hand in a second. And then, if you want to maintain the what if we turn hot and dry this summer, then use kind of an option strategy to re-own it. I do believe there is a lot of risk to the downside. And I think if anything, we may be a little bit complacent to the downward risk because the market in general has been in a sideways market. But let's just talk beans to begin with the risk. The reality is China came in and bought 15 cargoes of beans, but not from us. They bought it from the Brazilians for February, March delivery, it's been reported today. So the demand is starting to shift away from us right now. Now, the weather in Argentina is a little bit dry. That could be a little bit supportive to meal demand, but the reality is China doesn't buy a lot of meal. They buy raw beans, and Brazil is the big bean exporter of the world, and their weather overall looks good. And then on top of it, you got to remember, Jesse, we've been in a trade war with China now going on for about 4 years now. And now that trade war started with just tariffs, which are taxes on import of goods coming in on both countries. Well, President Biden upped that ante here about a month and a half ago when he blocked the sale of chips and chip technology, computer chip technology, that is, to the Chinese. The Chinese are not happy about that. It is going to hurt their economy. And that's why Joe Biden did it, plain and simple. It's going to keep their army from getting our technology. Well, we really have never seen the Chinese push back hard on it. And I'm a little bit nervous that if the Brazilian crop is there and it ends up being a bin buster, I think it's just unfortunate, just a matter of time before we see what we normally see, China canceling U.S. bean purchases and shifting that demand to South America. And if we start seeing that shift, it's very hard to see beans sticking at these levels. So if you're a producer, I would encourage you to keep an eye on these grain markets. The corn situation, it's the same. It's a situation, so not quite the same, but something we need to keep an eye on. Bean sales have been very good so far. Corn sales are half of where they should be. Okay. Now, logic suggests corn sales should pick up a little bit, Jesse, as we get into the springtime, but we do have a little bit of competition. Remember, for the first time ever, China has finally cut deals to start importing Brazilian corn. So some of that corn sales of the corn 10 million metric tons of corn we sold to China last year, we might lose half of that potentially to Brazil. So it's something, if you're a producer of old crop corn, you might consider, taking the bird in the hand also, say, look, if I can get $7 corn, I'm going to take it, and then use the what if. Now, one other thing I want to make a note, the thing we also need to keep an eye on the corn market, I think, is what's going on in the Ukraine. it does look like the grain corridor is going to keep open. But I think that's kind of what Putin wanted to do. He's keeping the grain corridor open so he can argue, I'm not stopping the flow of grain to the needy people. But if you look what he's done to that country, he is pounding them into the black ages, destroying their infrastructure. Well, Jesse, how are they going to really effectively export grain without power, without electricity? How do you get the grain to the port as well as get the grain out of the port onto the ships? Now, right now, I'm hearing reports that they're running on diesel engines. Okay, that's fine, but now we're getting into wintertime. Is it going to be a situation where they're going to have to make a decision? Am I going to use diesel engines to load corn to the Chinese, or am I going to use diesel engines to keep my population warm? So there is a situation where potentially that China demand that might look like it goes to Brazil, it may get forced back here because very simply, the market, I think, is thinking a lot of grain is going to get out of the Ukraine based on, hey, this deal's getting done. But we'll see if logistically they're able to. And I would argue the odds are we're not going to get as much grain out of the Ukraine as what the market's thinking presently.
You brought up South America as well here a little bit ago, and Brazilian weather's looked pretty good so far. I think we could all agree that the crop is off to a good start there with planting. Argentina's been a little drier, but obviously this is that time of year, Jim, where we really have to focus on the weather situation week by week in South America to see what they end up with as far as a crop. And as you alluded to, there's a lot of talk of, record crops out of Brazil. So I know that's going to be a big market driver here as we go through the Christmas holiday and into the first part of 2023.
Well, no doubt about it. The bean market's the first thing we're looking at. It's the early beans that get harvested, and that's the beans that China's starting to buy. If that crop looks like it's off to a good start, like I said, I'm looking for demand to shift. Then we'll follow up with that safrinha corn crop. That's their big exportable corn crop. We'll see if they can get how good of a crop that is. But yes, the Brazil looks good. Argentina, on the other hand, is having a problem. They're bone dry. They're continuing to struggle to get rain. I think there is some rain in the forecast here later this week, but not enough to really change the drought pattern. And Argentina is a big exporter of corn. And like I said, they're also a big exporter of meal. So it's a situation that if they continue to struggle a little bit, I think that does open up the door for the U.S. to start getting back some of maybe these sales we have not seen from the Argentinians, losing the business, coming back to the U.S., as well as you're probably going to see the bean oil market as well as the bean market domestically, stay a little bit supportive. As in essence, our crushers run at full capacity, plain and simple, to feed the world's demand for meal.
Jim, let's talk the livestock trade a little bit. What you saw there on Tuesday. It felt like a little bit of a recovery from Monday's sell-off, maybe a slight technical bounce, but even hogs kind of leaked lower at the close. What stands out to you in the livestock trade here as we finish up the final couple days of November?
Well, I think what you're going to look at really in the livestock trade when it's all said and done is going to be demand. I mean, like specifically on the cattle, we know the supply is tightening up. Logically, that's very bullish. The real question is going to be, is the demand going to be there both domestically and internationally? I mean, the hog market, I think part of the reason the hogs were under pressure yesterday is they're worried that if the Chinese economy really slows down dramatically and they have a lot of social unrest, that's not going to be bullish pork, because potentially we export supply of pork to the Chinese. We also sell a lot of beef to the Chinese as well. So that's a concern on the export front, but even on the domestic front, interest rates are probably going to be raised here when the Fed meets later on this month. So we know that's going on. Gas prices are trending lower, but you see what the Saudis are doing. Every time we get this gas down to 8, it seems like it's trending lower, and crude oil trends lower. The Saudis step in to try to force that market back up. So we're not going to get a huge repeat on the energy prices. And then it's just going to matter, what does the consumer do? I mean, Black Friday sales were pretty good from what I understand. Cyber Monday sales were good. But we'll see, as we get past the holiday season, higher interest rates, higher credit card costs, is that going to cause the consumer to retrench and move away from going out to eat and move away from those higher cuts? So I think if you're a producer of protein, I think you get, even though maybe the supply situation is tightening, the question is it going to tighten enough to offset the potential loss of consumer demand? And that's why I'd encourage producers, if you can, put floors under the market, just like in the grains, I do the same thing in the livestock.
Jim, great thoughts as always. Before we wrap it up, run out of time, any final thoughts you have for us? Anything else you want to reiterate here today?
All right, now the one thing I would reiterate, Jesse, is a lot of volatility. I mean, don't get lulled. We'll have very quiet days, just like we had today. Then you're going to get a lot of frenetic trading here as we wrap up the year. The funds tend to back away from the markets as they're closing the books, but that does open up for some opportunities to make some big moves. So if you're a producer out there, don't be afraid to put those wish orders in, but also, sharpen that pencil, as Jesse said. Start looking at marketing. I will tell you, Jesse, I actually had some producers, believe it or not, we're looking at ways to maybe hedge off some of the risk in 2024. So we're looking at marketing the 23 crop. We want you to take a very serious look at 24 crop as well, because I think if the economy does slow down, and it does look like it's going to, not just here, but around the world, and we happen to have two good crops in South America and followed up in the U.S., we all know the price is more than likely not going to be where they're currently at.
Great points, definitely, to consider. Jim, if folks want to reach out to you and the team there at agmarket.net to get a little advice, what's the best way to get a hold of you guys?
You can reach me or anybody at 844-424-4768, or better yet, just go to agmarket.net. Also, if you're interested, we are having a conference in Nashville the first weekend of February. If you go to agmarket.net, hit the top banner on the top, and it'll give you all the information about it.
Well, with that, we appreciate the time and analysis. Jim McCormick, agmarket.net. Thank you, sir, and we will talk to you again here in a few weeks.
Thank you. Appreciate the opportunity.
And that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.